Well, welcome back to Finance Uncut. On today's episode, return of the gold standard. Are we about to see a return to the gold standard? Well, before we come to that, we need to address the manipulation in the gold market. Is there manipulation? Who is doing the manipulation? And why are they doing the manipulation? What is their purpose? So let's start by cutting to a clip and see if there is any manipulation.
Gold price is absolutely manipulated. When I say that, I'm not, implying some deep, dark conspiracy. I don't think Janet Yellen wakes up in the morning and thinks about gold. I don't think Janet Yellen knows anything about gold, to be honest. I mean, she's sort of a geeky, liberal labor economist who worships the Phillips curve. So I don't think Janet Yellen's behind some conspiracy to, suppress the price of gold. But there's absolutely manipulation. And I've spoken to several experts. One is a PhD statistician. So it's not a PhD in economics, it's a PhD in statistics, works for one of the largest hedge funds in the world. He looked at a 10-year time series and he took literally tick by tick information on the COMEX gold future for 10 years. And he said there is no explanation for this data other than manipulation. It could not possibly have happened through normal market forces. In particular, he noticed that at the end of the day, like on the last trading tick on the COMEX, the price of gold got smacked down. And then at the open the next day, it could kind of pop up again. So he said, well, this is the easiest trade in the world. Just buy gold right after the close and sell it the next morning, just before the open, and you'll just make consistent, steady profits. Well, anyone who knows anything about markets and how they operate knows that you cannot make consistent, steady profit. This is what Bernie Madoff said he was doing, right? So he said the probability that the price naturally goes down at the close and naturally goes up the next point is zero after 10 years. And this is not inference. I mean, this is like DNA. You may not see the crime being committed, but if you have the DNA evidence, you can be pretty sure who did it.
Governments everywhere throughout history have wanted to manage. It's a critical national security, whether you go back to the time of the Romans, et cetera. Value of a currency is very, very important to manage, particularly if you're a government that hasn't managed your finances all that well. And unfortunately, that is, over time, most governments sooner or later find themselves in that position. And so the manipulation is right there in the open, and that it is a creation of a derivative market that satisfies demand that would otherwise go to physical, and that was the goal of setting that up, and that's not well understood, I don't think, by many market participants. But as I said, it's there in black and white on the historical archives. When you see gold trade the way it trades, when it drops, someone sells $3 billion worth of notional futures at 2 a.m. New York time. Having been on Wall Street for 22 years, I know for a fact that if any buy-side trader would execute an order like that on any consistent basis, they'd be out of a job very, very quickly. They're clearly somebody not trying to get best execution. And if they're not trying to get best execution, what you're talking about is a currency intervention, basically. And so, who is doing that? Is that originally, the U.S. government had a very strong interest in managing the perception of the dollar through gold. So yeah, there was famously in the late 1990s, Eddie George, an official with I believe with the Bank of England in UK, he famously said, we looked into the abyss. If the gold price continued to rise, it would have taken down one major trading house, and a number of others would have followed. And so there is a sign there that the banks at that point had gotten involved in gold financing that have left them short gold in a way that any real rise in gold would have led to an existential threat to them.
Yes, I think the price of gold is manipulated. And I think it's manipulated in a number of ways. I mean, certainly there is a concerted PR campaign against gold by central banks for the reasons that we've discussed. It is very specifically in the statist and central banker kind of interest to ensure a weak gold price. You don't want to see essentially the gold price de facto recreating a sort of reserve currency by just being incredibly strong. So there's a constant barrage of negative publicity towards the gold industry. When it comes to specific manipulation of the gold price, yeah, I think that is probably likely too. I mean, I can't. The problem is we can't actually tell because of the way central banks don't. Are very opaque with what they do with their gold holdings, and particularly their gold swap positions. But I think it's likely, and the reason why I think it's likely is because they've been manipulating other markets for a very long period of time.
Now, historically, hedge funds were not players in gold. There was a few specialists, but, they're doing stocks, bonds, whatever. Well, they've sort of glommed onto gold. To them, it's just another commodity. It could be coffee beans, soybeans, lumber, who cares? It's a thing to trade. Well, if you're short gold, like you've done some derivative contract with Goldman Sachs and you're short, it's easy to paint the tape. I mean, painting the tape just means manipulating the market through the gold futures market. Now, the other day, recently, a few weeks ago, somebody sold 60 tons equivalent of paper gold. Now, I make the point, they didn't sell 60 tons of gold. They sold gold futures contracts that were equivalent to 60 tons. But I can sell 60 tons of paper gold with a phone call to my broker. All I need is a brokerage account. They got to put some margin, like 5%. But it drove the price down, I think $20, $30 an ounce in a matter of minutes. And so if I'm short over here on the derivative side and I dump the gold here and the price goes down and then all of a sudden I make money over here, or maybe I want to go long and I want to drive the price down and then buy at the bottom and ride it back up again.
So it's clear we have manipulation in the precious metals market, but who's doing it and why? Well, before we cut to a clip from Jim Rickards, let me just say that Jim is a very smart man. He's got a lot of contacts and he's been around a long time. However, there are times that I disagree with Jim. And one of the big things I disagree with Jim on at the moment is inflation. So he thinks inflation's got to do with velocity, that it's driven by velocity. However, I've shared in other videos, and you guys that follow this channel will know that velocity, when you look at empirical data and history, that velocity has, well, let's say not a lot to do with it, because we've got the same velocity today that we had in 1946, yet CPI was over 19% back then. And I've shared in other videos where velocity was relatively low to moderate in the 1970s, yet we had high CPI. And in the 90s, we had high velocity, yet we had low CPI. We had almost disinflation during that period. So, and to be honest, I think Jim is still sour from a couple of debates he did. One he did, I think it was on Ronnie Stoffel's channel, with Lynn Alden, where Lynn basically used this empirical data that I've shared on this channel that shows that actually velocity doesn't have a great correlation with CPI anyway. And I think he's really, really annoyed at his debate with Peter Schiff on Kitco. I think it was late last year, where basically Schiff and Rickards agreed on everything other than inflation, and Peter Schiff really ripped him a new one and basically, said what the definition of inflation was, which was the expansion of the currency supply, and that it had been in the dictionaries for forever until recent years. And anyway, I think Jim is still sour on that, and I have noticed Jim is one who doesn't like to be wrong. So anyway, so who does Jim think is manipulating gold, and why are they doing it? Well, let's cut to a clip and find out.
The important question is who's doing it and why. And the question I ask is, why is it not being investigated by the regulatory authorities, by the Commodity Futures Trading Commission, et cetera? Now, one possible answer to that is that the Chinese are behind it and they're outside the jurisdiction. There's no way that a U.S. government agency is going to investigate the activities of China in our markets. China's too big. They're a sovereign nation that would not go anywhere. There could be a million diplomatic and national security and other reasons for not messing with China in that dimension. So China's my number one suspect because people go, wait a second, they got all this gold. Why would they want the price to go down? Well, the answer is they're still buying. Ultimately, they're going to want the price to go where it's going to go, which is $10,000 an ounce or higher. But they don't want that now because they're still buying. They're playing catch up with the United States. And by the way, they've bought thousands of tons, which is a lot of gold, but they have thousands of tons to go to equal the U.S. in the gold to GDP ratio, either in the absolute sense to get to 8,000 tons or in the proportional sense, gold to GDP. Either way, they're still playing catch up with the United States.
So Jim isn't the only person who thinks that China has been manipulating gold in order to acquire it. Over the weekend, I listened to an interview on Adam Taggart's Wealthion channel where he interviewed Stephanie Pomboy, and she echoed the sentiments of Jim Rickards. So I'll put a link in the description below to the Wealthion interview, and you can see the whole interview in context. But let's just cut to a clip and have a look at what Steph had to say about this topic.
The calculus for China may be, yeah, it's going to hurt our economy, but Chairman Xi isn't up for election anytime soon. He's there for life. And his number one goal is to challenge U.S. hegemony and establish China as a global economic superpower. And I think in the West, we are so cavalier and kind of flicking that off, like, yeah, whatever, China could never ever rival the United States, much less usurp our role as the world's reserve currency and the number one superpower. And I think that is dangerously naive because, again, he can take hits that our politicians have no ability or willingness to take. And if it means that they're going to deflate their property bubble and deleverage the system, which, by the way, is exactly what the tightening measures they imposed were intended to do. So, now that they're taking effect, everyone gets all hysterical about how, oh my gosh, look, they're deflating, this bubble is bursting. Exactly. That's what they were trying to achieve. No bubble deflates in smooth, perfect, controlled fashion, and they knew that. And I think people are overly cavalier as they watch what's happening with Evergrande, then then there's Fantasia, and then there's Modern Land, and we're going the parade of defaults. And the assumption here seems to be, all right, well, when it gets really bad, they're going to come in and start bailing this out and print money and do whatever it takes. Meanwhile, the yuan has strengthened faster and farther than it has in any times since they went on a managed float back in 2005. So it's a new approach. They no longer want to debase their currency to maintain export advantage to the rest of the world. They are really focused on getting their consumer economy going, handing their consumers purchasing power, rivaling the US, establishing the yuan as a hard money currency while we're at printing money hand over fist. And I think that could be the real surprise. If they let their bubble burst, eventually it's going to filter out their borders and all over the world, and we'll have a credit meltdown globally. And we are not in a position to handle that. They are, we're not.
I just want to go back to a term you mentioned a few minutes ago. You said that you see China as trying to position the yuan as I think you said hard asset backed currency.
Yeah.
Can you just dig into that a little bit more? So I just want to be clear, you don't want to put words in your mouth, but it sounds like you're thinking they are positioning the yuan to actually be backed by something, not just a fiat currency. And if so, what do you see it being backed by?
Well, I guess, it's impossible to prove, but
sure, you're just prognosticating here.
Yeah, I think that they have been stockpiling gold, but we won't know because they're certainly not going to run out and advertise that. And they're famously coy about not reporting sales for years on end. I mean, I think that they reported sales in 2017 that they had made purchases in 2017 that they had made 5 years earlier. So they're not putting their cards on the table, and probably shrewdly so. But I think that, they clearly, what they see, I think, is that they're going to need to have it backed by something. And obviously, they're making huge strides on establishing a digital currency. But I think that it's really the stockpiling of gold that strikes me as most interesting. But in general, even if they didn't back it with anything, they still, on a relative basis, are going to be in a position to look like the most responsible, currency out there, as the rest of the world is printing like crazy. So I think that, I've tried to figure out, when this bubble bursts, what will the monetary response here in the US be? We've obviously seen unprecedented stimulus after COVID, and we saw a huge stimulus right after the housing bubble burst. What could we expect if and when this market actually does revert to some semblance of fair value? And to come to some idea, I just looked at that pension funding situation, which is another one of my favorite nerdy topics, and it's improved enormously, not surprisingly, during this huge boom we've seen in financial assets. But it's still $5.5 trillion. So there's still $5.5 trillion underwater. That's public and private pensions combined. That's the entire U.S. pension system.
Right. When everything is priced to fantasy, it's still got a hole that big.
So the question is China, the big whale, manipulating the gold market in order to acquire it and to back its yuan and become the global reserve currency? Now, China wants to be a major player in the world. It wants to have the biggest military in the world, the largest economy in the world. Obviously, it was the yuan was added to the IMF SDR some years back. And it wouldn't surprise me at all if this was China's plan and they wanted to become the global reserve currency. However, I personally doubt that this will happen. Personally, and those that follow my channel will know that I've spoken about China, that I'm actually bearish on China. I think their economy, their demographics are terrible. They peaked in 2011 and they go down forever from here. So they've got a big debt bubble, and yes, they're trying to deflate that, and the speculative bubble that they've got in China. But ultimately, I think central planning economies ultimately fail. But it's not just me. Russell Napier recently did a Zoom presentation where he also shared a very bearish outlook on China. And you know what? I just don't think Western democracies, for what that's worth these days, with what we've seen over the last 18 months with freedoms and liberties and whatnot, but I don't think Western democracies would accept a communist country with the laws that it has as being the global reserve currency. So, look, China might be behind the manipulation in gold, like Jim Rickards thinks, and Steph kind of thinks the same way. And they might be acquiring these record levels of gold, levels that we don't even know about, and they may aspire to have the global reserve currency one day. But I honestly, if I'm being honest, I don't believe that they will become the reserve currency. I don't believe that we are going to return to a gold standard anytime soon. That doesn't mean I'm not bullish on the metal. It doesn't mean that the US couldn't revalue their currency against gold, similar to what Jim Rickards has argued in other interviews. And even on this channel, I've shared a couple of videos where Luke Groman has argued this point, to get that debt to GDP number down to 70% or so, and be able to lift interest rates, etc. To try to help us out of this debt mess. So, I definitely think that's a possibility. So ultimately, we don't know if China are the big whale doing the manipulating or not. It wouldn't surprise me. I don't think we're going back to a gold standard. However, I am bullish the metal because I believe we are going to see an inflationary decade ahead, and there's so many factors to that. One, it's the currency debasement, but two, moving to this so-called green energy. You guys know what I think of that. That is going to be extremely inflationary as well. Supply chain issues aren't going away anytime soon, and ultimately, I think we're moving to MMT, and I think we're going to see, Argentina style, potential style inflation. So I'm not in the hyperinflation camp. One, I can't even get my head around that, but definitely higher inflation due to both the monetary side of things, but also the goods and services side of things, and then throw in this wacko energy policy that we're seeing around the Western world. So I definitely see that. I definitely see the potential of revaluing the currency against gold, for example. Look, at the end of the day, they may be forced back to some sort of gold standard. That'll be the last thing they want. So in that sense, there could be a revaluation simply to get that debt to GDP number down. I think that's probably the most likely from here. But anyway, that's my thoughts, my opinions. What do you guys think? Do you think that China are doing the manipulating? Who do you think are doing the manipulating? Why do you think they're doing the manipulating? And do you think we could see a return to the gold standard? Really love to see your thoughts and opinions in the comments below. If you like the video, don't forget to hit that like button. Really do appreciate it. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.